Kaspa on Rust evolving testnet is coming. And this is basically a combination on the Kaspa network of not only moving the programming language from Go to Rust, but that will also coincide with increasing the blocks per second on the network, which does translate into transactions per second. And it is, slated to be the fastest proof of work network available, even to the point of eventually being able to outperform blockchains that are centralized like Solana. I'm looking forward to this. I've been looking forward to it for quite a few years now, as you guys are aware, and let's go ahead and hop into it. So on the evening of January 7th at 8 p.m., another pivotal chapter in the Kaspa saga will be written in code and history with the second unveiling of Testnet 11. This public release is the second expedition into the new Rust code base that brings the promise of the impossible 10 blocks per second on a proof of work network. The digital experiment provides an arena where developers and enthusiasts will come together to push the envelope, exploring the dynamics of the Phantom Ghost DAG protocol live on the Rust programming language. Testnet 11 is far more than a proving ground. It's a digital recreation of the real world, focused on simulating and stress testing a miniature version of an entire ecosystem. A world's worth of transactions, all anxious to settle instantly to buy their favorite snacks. Its evolution on fast forward, where the protocol endures rigorous trials, loads of simulated throughput, real-world mining and use, all while ensuring efficiency and security against any real-world scenario. Rewriting the Kaspa programming language from Go to Rust is an essential development to enhance performance and manage the complexities of the block DAG. This transition enables the groundbreaking achievement of 10 blocks per second, which allows for greater scalability and throughput. By increasing the blocks per second, the potential transaction speeds will go up to upwards of 3,000 transactions per second, as demonstrated in the highly successful first public release of TN11. The Rust programming language offers advantages such as higher efficiency and improved performance, memory safety, interoperability, error handling, and a growing crypto ecosystem and developer community. So since the first public testnet 11 captivated the crypto world, several enhancements have been implemented to optimize network efficiency and performance, improving high BPS communication, focusing on fine-tuning and orphan revalidation is crucial for seamless network functionality under high transaction volumes. Storage efficiency has also advanced with updates addressing the issue of quadratic writes in high BPS contexts, refining the network's data processing and storage capabilities. These updates, along with smarter caching through dynamic data tracking and enhancements like parallel processing for block submissions, signify a considerable leap forward for Kaspa. A display of the developer's ingenuity and insight gathered from the initial experiment. Refer to the release notes at the bottom of this article for a comprehensive overview of the updates. If you want a link to this, it's down in the description below. Obviously, we still have some time before this hits mainnet. So a lot of this is going to be buy the rumor, sell the news. And so, if you're looking at this from the perspective of what you should be doing, I suppose you would want to be either investing in miners for Kaspa or investing in Kaspa itself and then being ready to sell it once it hits those high numbers. My humble opinion, though, is really at the end of the day, Kaspa for me isn't viewing it as an investment vehicle as much as viewing it as, unlocking a true capability of peer-to-peer transactions. And that is something that I've looked at for quite some time and kind of said, what really matters here? Do we really want the price to go up if we really want usability? And I think that is something that we've talked about in the past with Dogecoin. We've talked about in the past with, all of these types of cryptocurrencies that have higher transaction throughputs. Really, you want a stable price point so that you can, invest and so on. Of course, one of the things that could happen here in this particular case is that you end up having smart contracts on the network and you have stable coins available to handle that side of things, while the actual investment side of things, because we are, you know, decreasing the amount of Kaspa that is generated per block and quite a bit faster than other networks, right? Is that the price of Kaspa will continue to go up because of the tokenomics surrounding it. It's also going to be interesting for miners when we get closer and closer to basically having nothing but fees. And this is something that's worried me about Kaspa from a mining perspective for quite some time. You see, the thing is with the chromatic policy on the reduction of block rewards, what you are ending up seeing is basically a very short span of newly minted Kaspa hitting the network. This means eventually miners will only be making money off of the transactions. While this is true on almost all proof of work networks, including Bitcoin, Kaspa's ends very quickly. And what that means is that if you purchase a Bitcoin miner, or sorry, a Kaspa miner, you do risk the potential of that actually not making enough for you to pay your power bill at the end of the day, because it won't be getting any newly minted Kaspa. To compensate for this, what has to happen is basically an increase in the amount of transactions on the network, which is what obviously we want to see with Kaspa happen. And hopefully with the increase in blocks per second and all that sort of thing, you see wide adoption of Kaspa in transactions. And that has to happen for the miners to actually be profitable on their systems. What they do risk at the end of the day, which will be, you know, yet to see, is that if the network doesn't get adopted faster than the newly minted Kaspa runs out, then you will be in a position where miners begin to turn off and the network loses its security. So I don't know. It's up in the air for me. The actual tokenomics, as far as how quickly you run out of base reward Kaspa, has me a little concerned, to the fact to where, like, I wouldn't spend a ton of money on Kaspa miners, especially because those Kaspa miners can only mine Kaspa. You guys know I don't like that with ASICs in general. So that's kind of my thought on it, but I am excited to see what happens with this. Hopefully what we end up seeing with Kaspa in general is that we see blocks per second, you know, get pushed through. This is successful. And we start to see it be implemented in third-party solutions, payment solutions, which will then drive the fees up, making basically the block reward a moot point at the end of the day. Everything in cryptocurrency right now, from a proof of work perspective, from Bitcoin to Kaspa to whatever the network may be, is purely reliant on this in general, which is the adoption enough to drive the fees up to make the miners profitable or not? If not, those networks will lose security. If so, then that will be the network that every miner moves to. And that is really where we're at. I mean, this is why, at the end of the day, like, if you want proof of why this is so important, look at Ethereum before it moved to proof of stake, right? The reason why miners were so profitable on Ethereum wasn't the base Ethereum block reward. The reason why miners were so profitable on Ethereum was because the network was being utilized at such a heavy rate that the transaction fees were so high that the miners were getting paid out a ton on top of the base block reward in Ethereum. So you really need to be at the Ethereum level of transaction fees for it to make sense on the mining side of things. Now, you guys mined during the bear market. You made it through. Well, at least maybe a half of you. I know a lot of you motherfuckers over here didn't actually do it, but the ones that did, I have a new shirt for you guys. And it says, I mined with the bears for the bear market. Okay. So if you mined with the bears and you want to rep that you did mine during the bear market, go ahead and head on over to shop.sonofatech.com. And the listing will be down below. I'll put it in live chat right now. I have a sweatshirt. There's a sticker if you'd rather have a sticker, t-shirt, premium shirt, all that cool stuff. Really like the new shirt. I ordered a few for myself and I just had that design finished this week. Eventually it'll be on the YouTube channel, but that takes a little bit of time. So just give it some time. Proceeds, of course, go to supporting me in the channel. So there you go. and I thought we put some work into it, and I thought you guys might enjoy it. Thanks for watching this clip from the Crypto Mining Show. You can check out the full episode here, and don't forget to subscribe down here as well. You can also check out my crypto mining e-course at sonofatech.com, where you can get a free month of supporter status with a purchase at sonofatech.locals.com. Also, don't forget to check out my merch underneath the video or at shop.sonofatech.com. I'll see you next Tuesday.